Eric Jackson of EMJ Capital joins me now. Talk more about it. Eric, good to see you. So you think that these companies on net will surprise to the upside? Is the market not already leaning in that direction, do you think? I mean, pretty much all of them have been rediscovered and come up pretty well off their lows this year.
Well, it's the third earnings season in a row where, in general, you hear not just bears, but kind of neutral market participants saying that big tech really needs to take earnings expectations down. They're rolling into the teeth of a recession, and that hasn't been the case for the last two big tech earnings season. We'll see how this one plays out, but I'm expecting overall for it to be another positive surprise at just how well some of these big names are holding in there.
Yeah, and some of the themes that we can pretty much foresee are a continuation of this cost-cutting story, which most of these companies, to one degree or another, have been undertaking. Do you feel as if that's going to actually allow estimates to go up, or are we just going to be able to kind of make up the difference with some of that cost reduction?
Yeah, most of the announcements have already happened. We might get some more details from the likes of Google this week, for example, about just what they're planning on doing, or from a Meta, we might get some incremental news. For example, last week, Zuckerberg said at a town hall meeting that he planned to keep headcount at something like 1% to 2% growth going forward in future. If he says that on the earnings call and kind of validates that statement, that would be incrementally positive news for folks in the investor community. So a lot of the stuff has been baked in, but there might be some new announcements. I think people are going to want to see, though, especially from the cloud players, just what kind of deceleration are we seeing from an AWS at Amazon, or from Google, or from from Microsoft with Azure as well. The rate of decel makes a big difference in terms of the valuations of these stocks. So is it coming down 2-3%, or is it 4 or 5 or more than that? So that's going to be the kind of color that people are going to be looking into.
And in terms of Microsoft in particular, there is, of course, the growth rate of the cloud business people will be fixated on, but then also just the exposure to the broader PC and business software economy, where we have seen some concerns about people tightening belts on budgets. Do you think there's risk there, or are they more or less a battleship that's going to be immune?
Yeah, I'm most nervous this week in terms of the players that are reporting in Microsoft and Snap. And with Microsoft, it's really that risk of enterprise spend. Basically, we got the announcement last week, Mike, from CDW, that they had seen sort of a big pullback in enterprise spend. Microsoft, in my view, is the most at risk if that kind of carries over to them in terms of what they announced this week. They're a bulletproof franchise, great brands. It's not a tremendously expensive valuation here if you're looking ahead to 2024. But I think they're most at risk of kind of a near-term upset in terms of what they might announce for this particular quarter relating to enterprise spend that might surprise the market.